Talk of the tape, the rally, the midday reversal, and what, if anything, it says about where your money is going to go in the months ahead. Well, let's ask Mad Money's Jim Cramer. He is here with me at Post 9. You heard the cheers. They saw the set. They think it looks great. They're as excited as we are.
Thank you. And I'm so thrilled to be on your show. And I'm sure they'll be first of many.
I hope.
Given the fact that I will do my show about, 25 feet?
Something like that.
Yeah, within the red zone.
Yeah, that's true. We're in the red zone. So, and we'll get to that in a moment. I want to talk to you more about that. But I do want your take first on what's going on here, this reversal, this Apple story that sort of brought the market down and what it means.
I think that we are in a unique opportunity to listen to companies before we take action. So we got unbelievable earnings from Wells. We got greater. Citi was really extraordinary. We got great numbers from Goldman. Morgan Stanley delivered a really, really good quarter. Bank of America is going to be in there.
Even did you hear Moynihan with Sarah? I mean, he's positive.
He's really positive
on the environment and the consumer.
You know what? I spoke to Brian this morning, and I've got to tell you, what really bothers me about people who are shooting first and asking questions later are people who, for instance, got Wells Fargo wrong last week. There was some headline. It was like the Wells was bad. The stock was down 3%. But bring it back. What I'm saying is that if you're buying stocks here, remember it's earnings period. And if you go after a stock like a Micron, which reported 53 and cut its forecast, well, you're going to be okay because the stock's down a lot. But if you're going to come in and buy Apple every single day it was up, and then think you're just going to be like some genius and buy more Apple, what you end up doing is you're fodder. You're cannon fodder. You're the kind of person who needs to really rethink your style. Because the style right now should be earnings season, stop, look, listen. And people are going to make mistakes. People made mistakes in the morning. It doesn't mean that things are bad. Goldman was terrific. It means we're now in case-by-case, Phil. And so stop being, look, if you want to buy the oils, natural gas, I like that. But other than that, I see no broad wave toward buying things.
When you get a reversal like this, it is a reminder that people don't like this rally to begin with.
No, they don't. I mean, I've got some stuff that I'm writing tonight with my nephew, Cliff Mason. And what we're basically saying, look, it deserves to be hated. The market should be hated. It should be hated because it encourages people. I think Ed Yardeni is going to be very good. I've known Ed for a long time because he's got a longer-term view about how the market can go up. The short-term view is still encapsulated by Mike Wilson, and who did a very good interview today. And some of the things that Mike Santoli just said, which is that, look, it's not bad. It's just not good. I mean, natural gas at a high here, it's great if you're in natural gas. It's bad for everything else.
The trend is certainly not your friend.
No.
And a great note today came from Jonathan Krinsky, BTIG. I follow him pretty closely. 60 days in a row now that we are below the 50-day moving average in the S&P 500. It's the longest streak since 2008, okay? And that does not portend things well when you have a streak like that.
Let me give you the other side of the trade of that.
All right.
We are doing much better than 2008. When I listened to the banks back then, they were disasters. Now they're just incredibly strong. This is a Fed-mandated recession, okay? It's mandated by them, and they can begin it, and they can end it. Did the Fed wait too long? I mean, what are we like? That's the kind of thing that in sports, because I love the name of your show, we would say, what are you, like some sort of armchair quarterback? I mean, when Frank Reich was down by 5 touchdowns, did he wait too long to start with a comeback? Well, he made it by a minute, but he should have started earlier. I mean, will you give me a break? What you need to know is individual companies. There are so many ETF ads, and people talk about ETF. Do an S&P ETF, but don't think you can time ETFs any better than if you're timing individual stocks if you don't know anything.
We're going to get IBM momentarily. I just want to remind everybody of that. And as we wait for that, because I want your opinion on it once it crosses, and Christina Partsinevelos is on the case. I promise you. She's going to have the number. We're going to see the reaction.
I've liked what he's doing.
You know it's one of only 5 tech stocks that's up year to date?
Well, it should be. It's got a good yield. Arvind Krishnan has done a lot of things to make the growth much faster. He's got to operate. He's got to get the cash flow better. But I've got to tell you, in terms of techs that are on the mend and techs that are doing the right thing, I think Arvind's got that going. I do think that there's always a currency problem these days. I was talking to Mark Benioff this weekend, and It is a great time to be a tourist. It's lousy time to be in business overseas.
Right.
It really
As
is.
you got, wasn't McDermott, SAP, wasn't, I mean,
Well,
a
that
service
was a
now.
lot of people thought he came on the show.
I'm thinking of his old gig. His new gig.
Felt he came on the show and literally was using it to be able to soften people's projections. I think what he was saying is, look, you have to understand, the rest of the world's a mess. It is. I mean, I was talking to my friend Ken Langone, who's my first guest,
Yep.
And I was saying, why is it that the strong dollar is anything other than, I mean, look, the strong dollar is great if you and I want to go to Europe and have a great time. But it's also emblematic of the fact that we're the only place to be. And because we're the only place to be, it's hurting some of our companies.
Well, it's hurting.